Hello, people. Very good morning and welcome back to the session. Hope I'm audible to all of you there.
Yes, sir.
All right.
Yes, Balraj.
Okay, great. Right. So, all of you have gone through the assignments and submitted it. Looks fine. So, what are the areas of concern? I have already shared the corrected answered file with you. I mean, what are the correct answers for that? Okay, so we shall start off with the discussions on this and later on move on. I think Anand will also be joining us very shortly. Before that, let's try and start off with this, right? So, areas of concerns we can try and identify now, right? So, first thing is if you have the files open, good enough. If not, I would request you to open the files and look at the transactions that we had given to you along with the right answers so that it's easy for you to understand, right? So, all of you could open and let me know. That should be fine. Right, so hope the file is open now. To start off with the first transaction, commenced business with a capital of 1 lakh rupees. So any capital that has been introduced into the business will always be treated as liabilities. Okay, hope it is clear. It might be equities or it might be shares or debenture, anything related to capital. It is always a liability for the business. Any more clarifications on this, or do you have any other point of view for this, people? Deepa, Harshita, Monica, Ravi, and Santosh.
No, sir.
No, Bala. That's clear.
Oh, all of you are clear with this, right? So any capital raised for the business, it's always a liability. Then comes purchased goods from Viru for 20,000 rupees. So ideally, you're trying to get some stocks to your business, and any stocks, it might be raw materials, semi-finished products, or anything like that, it will be treated as a asset only. Okay, like we've got our raw material stocks or any other materials that goes into the inventory will always be treated as a asset. Okay, so any queries on this you can raise now. Okay, hope this is also clear. Next comes purchased goods for cash, right? So irrespective of whether you are buying it for cash or on a credit basis, whenever there is a goods that is purchased, it will be treated as an asset only. Any queries?
No.
Great. Next one again, purchased goods from Abhiram for cash. Again, same concept. This also will be treated as an asset. Okay, whether it is a cash or credit, whether you're buying it from Abhiram or Abhilash or any XYZ, whenever you purchase a good, it is again an asset. So next one, bought goods from Sham on credit. Again, this is also an asset. Then comes sold goods worth 15,000 to Tarun. Again, whether it is Tarun or Varun, you're selling the goods to some XYZ, it is a revenue. And again, whether it is on a cash or credit doesn't matter. It is still a revenue. Then comes sold goods for cash 20,000. And again, this is also a kind of revenue that you're getting in, right? Whether it is a cash or a credit, that will be later dealt within the accounting. But whenever we are reporting, this will be treated as a revenue. Then comes sold goods to Utsav for cash, rupees 6,000. And again, this is also a revenue. Sold goods to Pranav on credit, this is also a revenue. Then comes The next one, which is returned goods to Viru, 3,000 rupees, right? Which says ideally, whenever you are buying a goods or whenever you're purchasing the goods, you're going to hit the asset account, right? That is your raw material stock or any specific stock account. Similarly, whenever you're returning it, this should also hit the asset account only, or normally we call it as purchase returns, or the vice versa. The opposite is sales returns, right? So purchase returns should also be part of your assets. Let's say we have, in this case only, we had purchased goods worth 20,000 rupees from Viru, and now we are returning the goods worth 3,000 rupees, right? So at this moment, after returning the goods, it should show us the correct value of the asset, right? Which is like 17,000 rupees as of now. In order to manage uh, these kind of transactions, still your returned goods or purchase returns will be part of asset only. Then comes goods returned to Tarun for 1,000 rupees, right? And if you remember, goods sold goods worth 15,000 to Tarun, which means we had sold the goods worth 15,000, out of which Tarun has returned us the goods worth 1,000 rupees, right? And again, this has to hit the revenue part only. Why? Because wherever you're pulling out the sales report, right, it should be your total sales minus sales returns. Okay, so if your total sales is 15,000, the returns is 1,000. Now your total sales will be 14,000 rupees. In order to manage this, because you cannot show separately, like 15,000 as my sales, out of which 1,000 is somewhere in the expenses or somewhere in the liabilities. You cannot do that. Everything has to be grouped together, right? In order to make it more sensible, it is like 12,000, sorry, 15,000 minus 1,000. So the balance 14,000 would be your total sales as of now. Okay, hi Anand, you there?
Yes, sorry,
Fine.
got late, and so I met some person. Unfortunately, they were talking too much. I was not able to avoid. And anyhow, so you could share and explain, right? Share screen and explain.
I'm not yet logged in into this. Please try and log in. No, I'm done till 11. You can continue at 12.
Sorry?
I'm done till 11. 11th one is done. Start with 12 with more explanations on this.
So you have not shared your screen.
That is what you only share it ahead.
So 11, 12, how can they understand?
Okay, try with 12 now. Finish, go close that. I'm done till 11. Or if you want to start with the beginning, you can start from the beginning again.
Okay. Yes, Ayal,
Hello.
any questions you have before we go? Before we go, any questions? Yes, Ravi?
Nothing, Anand. As of now, Balaji was explaining the directions.
Oh, let me join. Okay, just a minute. I'll share my screen.
Ah.
Okay. You can start recording. It's automatic, right? Balraj?
Yes, it's automatic. It's being recorded already.
Okay, let me take up Ravi. Yeah. So the question comes here. It's not the question that, okay, so you have done perfectly or something like it's not what I'm trying to tell here. Like I just want your view of like maybe I have correct answer, maybe wrong answer. Okay, that's what I'm trying to just get. So let us like how I'm going to assess this one, right? See, so why I'm talking, this is very much important. I used to tell always this. The reason behind it, SAP is a machine where we automate the entries. Automate the entries. We automate and semi-automate the journal entries, and it's going to be prepare the statements and other things and all. So when you are deciding journal entry, that means when we automate, that means we are going to set up that machine. So we should have a clarity what we have to configure, what we have to set up over there. So something debit, something credit, it's not possible. We should be clear what exactly it is. Example, see, we have some false here. So how that view is going to happen? Why we have this false? We check with correct answers and So I'm going to take up now everyone's. I'll take up everyone's now because I just want to correct in this base idea. When you are perfect here and when you are confident here, then the next part, that is the training of SAP is a difficult part at all, and understanding SAP is not a difficult part at all. Okay. So now let us start with why this false has come. Even we made false. You don't think that I'm 100% perfect, Balu is 100% perfect. Everybody has some their own way of thinking. That thinking has to be corrected. That is what we are trying now. That means we are trying to correct why this is false, why your perception is wrong. Say, for example, we are mentioning bought goods from Sham on credit. Yes. So why it is liabilities? Why? What was the answer?
Anand, now that should be asset.
Why?
Because as I was thinking that as in the point of the Sham, means Sham is a trader, so I was thinking in that part. So that is the reason I mentioned as liability that time. So now I got to know that saying that whatever is coming the goods, so that should be asset.
Yes, we are getting the goods. That's what the accounting we are going to do. So
Uh-huh.
okay, I may give it for cash also, but credit is mentioned over there. But I have to clear that. But ultimately, the value will come to the business, right?
Sure.
Getting my point? Or how? See, it has two effects actually, debit and credit. Yes, of course, I accept that. Okay, so sham is going to be credited and stock is going to be debited. But wow, what is that actually? What is the impact which is going to be happened if that comes? Means ultimately my cash will reduce and my stock will
Assets are
increase.
increasing.
Stock will increase.
Yes.
That's what's going to be happen, right?
Yes, correct.
Yeah. So the way you have to think in this way. Okay. So others also
Got
please
it, Anand.
have
Yeah.
a note on
Now,
this. So others also, it is not only for Ravi. Remember, it is for others also. Okay. So always remember, don't think that okay, I'm telling to Ravi, okay, it's not my part. Everybody should understand with this. So that means what I'm trying to tell here. So this bought goods from this one means ultimately what's going to happen, just assume if you mention it as a liability. I have 5,000 rupees cash. So I get a stock of 1,000 rupees from Sham, just assume. So temporarily maybe creditor's GL may update here because I want to give it him on credit. But someday this has to reduce and this has to reduce here. Ultimately, my cash has turned into stock. I had a cash that turned into stock. That's what. Okay.
yes, got it.
Yeah.
Clear.
So next one. Returned goods to Viru. Viru is a supplier. We bought something here. So you mentioned revenue. Why it should not be revenue? It's not revenue. So what is the meaning of revenue? You are getting money out of the benefits you are passing from business. You may have some items, you may sell it, you may give some service, you get it. But that is revenue actually. So if the say if you purchase some 1,000 rupees stock, out of that, just here only, 1,000 rupees stock we purchased, but out of the 200 rupees is actually the product is not good. I return it. Then vendor has to give back money. So then my cash will increase. Okay, but ultimately I cannot consider it as a revenue, because if I consider it as a revenue, my sales will increase. So it's not a sales, it's the expenses reduction of expenses. Are you getting my point? Ravi?
Anand, yes, I'm getting it.
So next, goods returned to from Tarun. Then again, it is revenue, just opposite. We did a sales, but he has not satisfied, he has given. It's not expenses, we are reducing our revenue. That means minusing our revenue. That means it should be revenue. And this should be expenses.
Anand, 11th, it should be a revenue or asset.
This one,
11th one. Goods returned from Tarun.
Goods returned from Tarun. See, ultimately, we did a sales.
Okay.
Yes, we did a sales. First thing is how the things will go. See, here, multiple angles we have to think. But ultimately, the sales will get affected at the end. First, we go issue the goods. Think of it. So we have just think of finished goods I have. That means final goods I have 800 rupees. I have sold it for 200. So when I sold it to this one, I reduce the goods. First, what I do, finished good credit, I will give it 200. And goods issue, I will do it 200. Okay, that means it's going to be debited. So it was credited before. So sorry, this is debited. So now this is the reverse impact. But after, sorry, I'm sorry. So when I do the sales, it's going to be like this. So goods issue means actually we do cost of goods sold, we call it. I discussed that one. Okay, cost of goods sold, we do this 200 rupees debit. So then after we do the billing, right? Billing we do. So that means Tarun will come to picture here. Tarun debited. So first I have done 200 rupees, 200 rupees, 200. Okay, Tarun has sold it for 250 rupees. That means the product which I had in my hand 200 rupees, I sold it for 250 rupees. That's the 50 rupees is the profit. But Tarun will come back and says, okay, so some of the product I'm not satisfied. I'm returning all the products. Just assume all the products or some product. Let me take all the product. So before that, like before I do this goods update, I have to update this revenue reduce, right? Because he is returning. I didn't do any sales. I need to do the reversal entry here first. Sales credit, Tarun. Credit note, what we call. We have to raise credit note.
Yes,
So
sales return.
then it has to go here. Yes, as you said, goods will return. It has to come. But I'm not going to that deeper now.
Okay.
So I'm at this. Okay, immediate effect. He has returned. Yes, sales will get returned.
Okay, got it.
Okay. Yes.
Clearly.
From your angle, it is right actually. That's also we can accept. But we are trying to clarify ourselves. That's it. How I can do it.
Yes, now clear. Now
Yeah.
clear.
So goods taken by proprietor for personal use. How come it is expenses? How did you judge it? How did you decide it's expenses?
Because personal use, no, so like either we have to put it as a assets, maybe, if I'm not wrong.
So my question is, how did you decide it's expenses?
Because it is going as a personal use, no, so we are weighing out. Means we are not doing any bill and we are giving as a from the company as a personal expenses. Means from the.
Yes, but it is not written, right? So the question, the
For
idea
example,
is
fair cost.
you are the owner of a business. Say, for example, you are running a business.
Okay.
And you have some products over there. Okay, if you take that product from that, the stock will reduce. But you and the business is separate always. So you are maintaining the accounts of business, not your personal. You are not bringing your salary and putting into the same account. When you look into the business, business is separate, you is separate. You may be the owner of that one. You have invested and you are doing your business. When you are drawing some amount or maybe some product, maybe some use, whatever it is, you are taking from the business means you are supposed to give it back. Okay, to the business back. Or else it is going to be reduced from your profit. Are you getting my point? Take.
Yes, yes.
You have cash of 4,200 in your business right now. Just assume. This 4,200 rupees, you take 200 rupees from the cash. Okay. So I want to buy something to my, I want to buy some, I want to go for out or else I want to do some personal use, maybe petrol, for own car. 200 rupees you will take it. So the 200 rupees, whatever is reduced, it's accountable. Accountable means it is not a money of yours, it's a business money. So then that money you are not supposed to take. It's going to be like, okay, proprietors withdraw, we can do it. Account. So he has withdrawn this one like this, 200 rupees, we'll keep it here. We reduce here and we keep it here. Why means we paid. Take for example, you have 4,200 and you ask me, okay, Anand, could you please send me some products for 200 rupees? I say, okay, I'll send it, but you have to pay in advance. You have to pay first, then I'll send. So when you're doing that, obviously you keep that, okay, I paid Anand advance 200. You keep it here because once I got the stock, then you knock it off from my side. Knock it off means when I increase my stock 200 rupees, I'll send. So then, okay, you just increase this, you delete this. That okay, you paid it. So like that, the proprietor is also external person for the business. If he takes this for personal use, he is supposed to give it back, or else when he is taking his profit, then it's going to be reduced because he is already withdrawn.
Yes.
Got
Yes.
it? Yeah.
Good. This should be asset, right? Then.
Yes, it should be asset. So then, bought furniture for proprietor's residence. Yes, of course, the same concept. It's not. It is completely wrong what you have mentioned. Bought furnitures, it cannot be a revenue. Okay, so he is spending office money, company money, to bring
Okay,
the furniture
yeah.
to this one. Then again, it's a liability. Sorry, it's an asset. That
Asset,
means
yeah.
our money is with
owner.
owner. Yes.
Yes.
So here the impact. So paid cash to Viru means Viru we have already bought. Okay, stock. It was there on the top. You can see that. Bought Viru. Return goods. Viru. Purchase goods from Viru. Then it's going to be asset. Means our asset increase. So then we have to pay back now. So we are paying that 20,000, whatever the amount we are paying means it's not a liability again. We are reducing the cash.
Okay.
Okay, it was in creditors. So I take out the creditors and I take out the cash. Got it?
Yeah, it should be asset. Yeah.
Yes, it should be asset.
Okay.
So cash received from Tarun. Again, it is a what? Cash received from Tarun. So it's already stock is being in debtors. It's asset only. It's correct only. Bala, just correct this. Cash received from Tarun is going to be asset only. Because it's already it's in the debtors, like Tarun has already we sold the goods to him, and the sales is going to be this one. The final impact. So this impact I'm talking. So ultimately, after sales, Tarun is going to be give the money to us, 250 rupees. So just I'm taking a different amount. Don't get confused. So this is the entry. This one, okay, 250. So then what's going to happen here? It's going to impact the asset only. This is just a confusion from my side only. So this should be correct. Okay, please correct ourselves. Check received from Pawan. This is already. Oh, it is asset only. It is there, right? It was liability, right? It's not a false. These two are not a false. These two are correct. Okay.
Okay.
These two are correct. The 23rd and 25th is correct. So just change it in this one. And paid Intel computers by check. This is liabilities. Why it is for like this for why it is liabilities?
And
I'm
that's what I
telling
said.
this is liability, and you are telling something else.
Sorry.
I'm telling this.
Huh?
So paid to Intel computers by check.
Means I mentioned as liabilities. Yes.
No. So one thing which this you mentioned it as liability, right? So it is not liability. It should be asset. If it's
Okay.
asset reducing, that's it. Money is going out.
Okay. Got it. I was thinking in point of view
So
the
no.
traders.
One second. I'm just missing the angle. I'm sorry. Wait. I'm missing the angle here. What we are discussing this one and trade intentions. So yes, it should be asset. Why? Money is going out.
Okay.
Paid. Got it? Money is going out.
Money going out. Okay, fine.
Yes, it's not a liability means money is coming in.
Got it.
Okay. Paid to Anush by check. Yes, again, it's the same.
Asset, yeah.
So ultimately, the angle what we are trying to understand here, when we are getting some these type of inquiries, we should be aware of, okay, so whether the money is coming in, whether the money is going out, okay, whether the money is coming in or going out. So whether it's asset or liability, that's the way which we are trying to we are trying to understand here.
Okay.
So that's what we discussed last class also. Expenses, what is that? Asset, what is that? The idea behind revenue, what is that? Liability, what is that? That's what we're trying to understand. Got it?
Yes,
So we have to think from this side.
Yes, I got it.
So please correct yourself. This is going to be really, you're going to understand why we're discussing this in the future classes. See, because as I mentioned just earlier this class, in SAP we have many tools which we are going to set up, so that has to debit and credit automatically 90% of the time automatic. So that's what we are going to do in finance. That is what the key area, how it has to work. So then when we are setting up this one, obviously we should have the clarity. So which GL we should use, expenses, revenue, asset, or something. How you can judge the scenario, what the client is telling. Clients keep telling, okay, we want like this, we want. We should be able to understand actually what they are telling. So for that purpose, it's very much important, this exercise.
I got it now. Yeah. I'll quantify it. Thank you.
Nice. Correct yourself. That's it.
Sure. I'll do that. Yeah.
Okay, let me take Santosh. Hi, Santosh.
Hi.
Everybody has false. Anybody without false? Yes. Yes, Santosh.
Yeah.
Have you judged this first one? Commence business with capital.
Coming business and capital means the asset of the business.
Yes. How it's going to be asset? Money is coming in.
Coming in business means asset, right? This is paid money means expenditure.
Yes. That's what last class we discussed.
Yeah.
So if the money is coming in means it can be revenue or liability.
Revenue.
So you get the money if you are selling something or you are borrowing something. Commenced business means you are getting the money to the business.
Yeah, sell something in
If you are spending that on something, it's going to be asset.
yeah.
Correct, na?
Yeah.
Yes. It should be liability. So goods taken from proprietor. There is no concept of drawings. Drawings, it has to fall either these four. It has to fall between these. So you have to judge which one it is.
Okay.
So which one you said?
Expenses.
How did you judge? Please be open and be louder, and you have to be very clear in your statements. Your statements has to prove or something. You have to correct yourself if it's wrong. Yes. So how do you judge that it's an expenses? What is the logic behind it? If the proprietor is taking the proper this one.
Proprietor using in personal use in amount, some money. It's
So now
expense subject.
your voice I'm not it's not clear. Please be little bit louder and something you have to be you have to speak little bit something I'm missing some like that clarity in your voice. So you have to be specific, very clear, and talks this one loud, a little bit louder, please.
Okay. Proprietor using in the money in the personal use.
Proprietor using for personal use. Yes. So which one you are telling? Expenses.
Yeah.
Okay. So it is not actually correct. Proprietor is a separate person for business. It's a business account we are doing. Okay. If I'm running a business and if I take some money from the business means I'm supposed to give it back.
Yeah.
I can take only profit after the calculation of profit or loss. Before that, if I withdraw something, it's a money which I have taken in advance as a profit in advance for personal use. My personal, I may go for a hotel or something. That's my personal. I may spend it. But when I'm taking from the business, it is going to be an asset. The money which I have, means which the business has, it's been taken by proprietor for his personal use means the proprietor is supposed to give it back. That is, money is going out. Money is going out, whether you are doing expenses or asset. So expenses means proprietor is not giving any money to you guys for any benefits to you. I'm taking makes if I'm a proprietor, if I'm taking money, I am not giving any benefits or any services business. On that basis, I'm not taking. I'm taking from the cash so that the money which is going out, it's an asset which I want to recover it in future. It's an investment.
Yeah.
Got it? The way?
Yeah. Yeah.
Yeah. So next one, cash purchase. Purchases, how it's going to be revenues?
The liability. Hello.
Purchases.
It's liability. Pay money
It's,
to the
it is not a liability. Purchases, first thing from this. Purchases means your
purchasing some
money is going
emission.
out. Money is
Yeah.
going out.
Yeah.
So then it should be either expenses or assets. Right? So
Yeah.
whether it's expenses or assets, which one?
It's expenses.
It should be because there is no concept of goods over there. It should be expenses.
Yeah.
For furnitures again, it's not a drawing. It should be asset. If for that means if the proprietor takes any for personal use and paid cash to Vero, so money is going out.
It's expenses.
It should be asset. Why? Paid cash to Vero means we already taken live this one some value. That means this one. I'm paying now against it.
Return.
I'm no. I already taken the goods from him. Okay.
Okay.
So I'm paying money to him. That means so money it's going out means cash account will get. It's an investment which I'm doing.
Yeah.
Got it?
Yeah.
The same received from this one means it will see here the received from received like the paid cash to Vero, paid Vero by check, both are asset. And this is actually cash received from Tarun. So money is coming in, then it's going to be what?
Money coming in the business means also cash received from the Viru.
Yes, whether it is say money is coming in, whether it's a liability or
Liability.
revenue.
Yeah.
How it's going to be liability? Actually, Ravi, this was I was a little bit mistaken. Means I just missed the angle on the time when I was talking to you. It is cash received from the Tarun. So we did a sales. I'm taking value. Then it's going to be revenue. Ravi, please correct yourself. I missed it. Okay.
Anand, you mean to say cash received from Tarun should be revenue?
Revenue. Revenue. Why means money is coming in against sales, right?
Okay, okay.
Yeah. Took loan from Anush.
Wow.
It's revenue.
Confuse
It's
myself.
liability. Correct. Why it's coming false? It is liability only. Correct, Balraj, please correct this. Check received from Pranav. Money is coming in. It's a revenue. So
Yeah.
received from Pranav means Pranav we did a sales and we are getting the money from him. It's a revenue.
Yeah.
What about paid? Intel computers.
Yeah. To take
What? Why it's liability?
Tarun.
revenue.
Santosh?
Yeah, revenue.
Cash received from Tarun, 12,000 revenue.
How you say that it's a revenue? You paid Intel computers by check. Santosh?
Yeah.
How you
Paid
judge? How you judge it?
paid amount sum in check in computer. Purchase the computer.
So what's going to happen here? Money is going out, right?
Yeah. It's expenses.
Yes. Retrieve from bank personal use. Again,
Into
it's asset.
Yeah.
Cash taken by proprietor. Yes, of course, it's asset. The same concept.
Yeah.
Paid Anush by check. That means
expenses.
it's an expenses.
Yeah.
But finally, bought additional capital.
It's liability.
Yeah.
Yeah.
See, I tell you, like I already said this to one student, I know. But I tell you why I'm telling this one. Okay, so you don't know the reality. We got a project in 2019. One project suddenly come to our desk. That means from other company, it suddenly they just said us like it has come to our company, which we are working right now. Okay, why then it has suddenly moved from that company. We don't know why, but they said okay, we want support from a particular like within short period, like 1 or 2, like tomorrow day or like next week, like that. So when I met this users, like it was near office was in the same building, the client office also. And when I met the users, I asked, okay, why this project suddenly you have handed over to us suddenly? I, and he said, okay, actually a meeting was going with this consultant. Like we are a consultant. We are working as a, me and Balraj is working as a consultant. In meeting, the consultant was explaining about the entries in SAP to the person who is like, generally we talk to heads. Generally, we always talk to the heads like CEOs, CAs, CEOs, like this top people. So when it was explaining like this SAP, like it's set up like this, it works like this. Somewhere else, they asked for like they said that okay, it should not be a balance sheet account. It should not be an expenses account. It should be a balance sheet account. The client. And the consultant has tried to prove that he is correct actually, like this. Okay, no, this is asset, this is this one like this. So do you remember they just fired that project immediately? They said if the person is not able to judge, okay, it's an expenses or revenue properly. Sorry, it's an expenses or asset. How he is going to give the consulting to us? They just fired the project itself. So we don't want this the support from them. He is not this one. So He was very good in SAP. He's a well experienced, but one that small mistakes made him this big project has lost to them, that company that has come to us. Okay, remember. So this is the reality which goes. That's the reason I'm taking care of in the beginning itself, because in future class I cannot take this when I start SAP. But I'm stressed. If someone is feeling that okay, why this person is doing with this small, like this basic of accounting which we learned in. So if you're perfect in that, it should not be a false. If nobody is false means okay, I was very happy. I would be happy. But many people are false out there. I have seen this already reports. I'm just doing that correction. Don't judge like that. Okay.
Hello, Anandji.
Yeah. Yeah.
Only one doubt is there in that particular sheet only, what you are explaining.
Yeah.
26 and 33, I got to know that in my sheet it was assets, means
Yeah, that's what I just missed your angle. When I started now, I missed the angle of like assignment, what I had given. I was just
okay,
thinking from the angle of like for the P&L account and balance sheet and other things and all. Okay, then I
okay,
corrected. At the end, I said that I missed the angle. I just thought because generally the classes which goes right. So many other discussions will go with other classes. I just was missed the angle. What angle we had given this one, the assignment, because I have just confused with other assignments. That's the
okay.
reason I corrected here. And I said
Is it possible to explain one time 26 and 33, if you don't mind?
26 is like Intel paid. It's in like money which we have got it, like which we are paying. Okay.
Okay,
Paid
okay,
Intel computers by check, right?
okay. Means
Yeah,
paid.
paid.
Okay.
So we got some services or something. We are already booked all those. This goods has come. Goods has come here. So we
Okay.
can take in two angles this one, because this is the third. This is the third entry which we are doing here. That means when we receive the goods, we update the stock first. Let me don't go for that much deeper right now, because others will get confused.
Mhm.
So we can think like that. We got a goods or services from Intel and we are paying now.
Okay, got it.
So
Yes,
like the batch, like directly I can think. Without goods also we can, I'm paying directly, like expenses account debit to check account credit.
okay,
Like
got it.
I can take it. I have taken from the time. Money is going out like the time.
Okay, debit expense and credit is money going on. That's
Yes,
it.
exactly.
Okay,
Exactly.
okay, thank you.
Thank you.
That's,
So Ravi got it? Yeah, so
yes.
Santosh got your points.
Yes. Yeah.
I'm not seeing your enthusiasm today. You're losing your something last week. Okay, you were energetic. Why you not feeling well?
Yeah, well.
Santosh.
Yeah. I'm good.
Okay. So almost everybody the same path they have done the this one. Deepa.
Yes, sir.
So purchased group goods. How it's going to be liability?
Here, creditors is created, no? So that's what I mentioned as like liabilities. Like creditors account will be created.
So don't go for accounting. Money is going out or coming in.
It's going coming in. See, like money is
Purchase.
going out. He's purchasing the goods. Like we are getting asset and also in that money.
Asset only.
Yeah,
It's an investment. Bought goods from credit. It's again asset.
asset.
So sold goods for Tarun. How it's going to be this one? It's a revenue.
Yeah.
Huh? So
Yes,
then
sir.
sold goods to Pranav.
This is
Yeah, it's
also
a revenue. Okay. So return
return.
goods. It's not a, again I said, no, return goods to Viru means it's reducing your,
Like we have already Virus account, no? We are reducing money from there. So that's what I mentioned.
that means you should judge which one it is. It can be only these four, right?
Expense.
Expenses. That means money is coming. That means we are returning this, means we already reduced it, like we already sent that one. But when I'm returning goods, means goods as it the asset. So then
Yes.
it's going to be asset reduction.
Okay.
So no, it's not an investment. We are reducing the asset.
Yeah.
Okay. So which we
Okay.
already did. Goods return to parent means it's going to be sales. Means that is revenue again.
Revenue.
Reduction. So taken proprietor, I already explained it should be asset. How
Sir,
you
instead of asset, we can reducing the amount from the liability, no, like share capital's amount, we can reduce it, no.
No. We cannot share capital we have invested. So we are drawing this 1,000 or whatever it is. It's from the future profit we are drawing now only some cash in advance.
Okay.
Got my point?
Yeah.
He is
got it.
withdrawing he is not withdrawing his capital. He is just taking some amount of the future profit. Are you getting my point?
Yeah, yes, sir.
Yeah. So then it should be, as it already explained to everyone, everybody made this one. Cash received from Tarun. Again, money coming in.
Asset.
Money
Asset.
coming in.
Mommy, best.
Money coming in. They have everybody confusing here.
Sorry, sir.
Yeah, no issues. So cash received from Tarun. What is the answer of?
Like how I have mentioned here, liability in the sense cash issued from Tarun.
So one thing is, it is coming in correct. It's not a liability. Means we are getting against sales.
Yes, revenue.
Cash received from Pranav. Again, it's a
Yes,
revenue.
it is revenue.
So withdrew bank from personal
The-
use. It's again asset.
Asset.
So cash taken from proprietor
Asset.
for personal use and Anush by check. It's asset. Loan. It's a liability. It is correct actually. Why it has come as false here? Paid Anush by it's paid Anush by check. It's an asset. How it's going to be a liability? You are giving loan to Anush. Your
Yes.
money is going out.
Okay.
That means company money is going out.
Okay.
Hmm?
Okay, sir.
Yeah. So next one is okay, Santosh, Ravi is done, Harshita, then Monica. I'm seeing same number of false with almost everyone, but they are doing some difference. Some of the common false. But here little bit more. Harshita, I think you cannot talk, right, Harshita?
Yes, sir. I can
Yes.
talk.
You can talk, right? Yes, okay. What about this? Purchases. How come it's going to be liability when money is going out? You see here.
Sir,
How come it's going to be?
sir, if we mention the person's name in our books of account, we are liable to pay no, sir.
See, first thing is it's a concept of what is that? The concept is whether you have to judge whether it falls under expenses or revenue or liability. That's it. That means if the money is going out, I mentioned spending which are more than 1 year. That means like if the money is going out, purchase goods means it's going to be what?
Asset, sir.
Treating in asset, we can treat it as a liability. Sorry, this expenses also. That part I will come to later, but I don't want to mess up all those things together. That's the reason I'm not talking in that way. So this is purchase goods. When it comes to goods, means it's going to be updated in this one. So purchase goods from Abhiram for cash, again asset. So bought goods from Sham for credit. Is it asset?
It's liability
It
because
is
we are
asset
taking
only.
on credit, no, sir.
See, bought goods from this one. Goods is coming in. That means we are spending. Where money, we are getting something means we are spending money, right?
Yes, sir.
Right? Sold goods worth third. So it's a sales. How come it's going to be asset? Sold goods.
It's income, sir. Revenue.
So sold goods to Pranav on credit, whatever it is, it's a sales. Money coming in. Goods returned from Tarun. So return from Tarun means sales has reduced. Okay. So we cannot treat it as a liability. However, it is actually money is coming in. That means it's a revenue, revenue, revenue. Okay. You are reducing the revenue. That's it here. When you return from the goods. Are you getting my point?
Yes, sir.
So what about this goods returned by proprietor, personal use? What it should be?
Asset, sir.
Are you sure?
Yes, sir.
How?
Sir, because our cash is reducing now, sir.
Yeah. Our money is going to this one. Bought Intel computers for 25,000 rupees. Assets, right? Money is going out, it's investment. Bought furnitures, again it's an asset. Money is going out. Paid cash to Viru.
Asset.
It can be asset, it can be expenses, both. But that's what I'm telling. Somewhere else. So if I go for that part, it's going to be a little bit because here I can make it as an expenses also. I can, but I'm treating from the angle of like we are having that goods for some time. But in the last class when I discussed, like I remember that if you're using more than, I can keep that stock for more than 1 year also. That's my choice. Don't think it's only for a short term. Okay.
Okay.
So let us do not mess up with that. So what is this? This I can treat as expenses or asset as well. So withdraw from bank. So it's going to be money. Money is going out. How it can be this one? So the money we are not paying anything. We are keeping in cash. From the bank, we are keeping in cash form. Then it's going to be assets. Cash received from Bhuvan. It's a loan which we are getting. Again, how it's going to be revenue? When it's coming in, it's a liability.
Sir, that is nothing but interest received now, sir.
Cash received from Bhuvan on loan account.
Yes, sir. We
They
gave
have
loan
not,
to Bhuvan.
they are not mentioned. Loan account means that they're getting the loan from Bhuvan, not interest. Getting the loan from Bhuvan 10,000 rupees. You got my point?
Okay, sir.
What they mentioned, cash received from Bhuvan on loan account 10,000 rupees. They have not mentioned anything here interest. If they mentioned interest, yes, it should be. It should be revenue. But it's not an interest. It's a loan itself. Got it?
Okay, sir.
It's clear. Clear ಆಗ್ತಿದೆಲ್ಲ? You're getting clear? Clarity?
Yes, sir. Yes, sir.
Yeah. So retrieve bank from bank personal use again. It's a money is taking from this one vendor. Sorry, this proprietor. That is assets. So cash taken for personal again. It's asset. Loan paid Anush. That means we are giving the loan here. It's asset to Anush. Got it right?
Yes, sir.
Yeah. So what about last one, Monica? Monica, you there? Monica? 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 So can we talk?
Hello.
Can we talk? Monica? Monica, can we talk? I'm not getting your voice, Monica.
Sir, right now I'm audible.
Yes.
Hello. Yeah.
Okay. Yes. Again.
Sir, I'm saying actually, I'm saying I'm on another call with a client. Can you please allow me 1 minute only? 1 minute only.
Okay. Okay. No issues. Yes. See, I'll discuss with you, Monica. Okay. Yeah, we finished it. Just continue.
Yes, sir, I'm available.
Yeah. See, this commenced again. It's a money coming in, then it should be liability. Okay. Purchased goods from Viru. So that we are spending money. That means it's going to be asset. Purchase goods from cash. It's going to be asset again. That means goods we have there. And it's going to purchase goods from Abiram again. It's going to be asset. And bought goods from Sham on credit. So how it's going to be liability? Again, it's an asset. So that means when you're thinking from the angle, you have to think, okay, whether we are spending or we are getting. So if you are spending, there can be two options. Either it should be expenses or revenue. I hope you are getting my point, Monica.
Yes, sir.
Yeah. So like that, goods return from Tarun means, so why we decide this goods return means, we have already done the sales. We have increased our sales when I'm selling these goods to Tarun. But when he is when we are getting back that goods, that means what's going to, my sales is going to be reduced. So that means I'm giving a negative entry for the revenue. That means it's a revenue again. Money is coming in. From the angle, if you think that it's a money is coming in, Tarun. So we are reducing the revenue. Okay. Money means goods is coming in. So that means that's what I'm just reducing the revenue instead of increasing the expenses. So goods taken for proprietor again. Proprietor, whatever is done, it's always is going to be assets. Bought furniture, it's going to be asset. Means proprietor is a separate person for business. And paid cash to Viru. And paid cash to Viru by check.
Sir,
So that
if something is withdraw from the business, so it should be liability, right?
see, withdraw means what? Money is going out or coming in.
Out, sir.
Then it can be asset or expenses. Right?
Either from our business only. We are a proprietor and we need a cash and we go in the bank or some kind of capital, so we need a cash. So if we will withdraw the cash from our capital.
Yes. When you are withdrawing, you can withdraw from your personal account, not from the business account. You have a business current account in your bank. And I have the personal account. If I want to go to a hotel to eat something, I cannot go and withdraw from my bank account, like a business current account. I have to draw it my personal account. So if I'm drawing from business account means I'm supposed to give it back. It's and money is going out. So I'm giving in advance that, okay, I'm taking in advance the profit. In future profit, I'm going to reduce it. Got it? Monica?
Yes, sir.
Yeah, nice. That's how it works. And again, in this paid cash to Viru, it can be asset or it can be expenses. Both can be accepted. Okay. And cash received from Tarun. Received from Tarun means money is coming in. Then it should be, sorry, sales, revenue. Should be revenue. Money is coming in against sales. Again, took a loan from Anush. Loan from Anush. That means money is coming in. It is correct. Liability. Why it's false? It's coming here. It's correct only. Liability. We took a loan from Anush. It's a liability. So check received from Pranav. From Pranav means money is coming in. So the Pranav is giving. He is not giving that loan. So and first thing is it should not be an asset. It's a not money is going out. It is a money is coming in. Check received. Either it should be revenue or this one. So when I'm receiving, that means not mentioning anything, not mentioning, not mentioning anything like that it's a loan or something. So then it should be against the sales only. Then it's going to be revenue. Clear? You're getting, Monica? Angles?
Sir, there are a lot of angles actually. Now we need to do the practice over here because most of the time I'm getting
It is
confused.
not, it's not a like that means it's a four, only four angles it should be. It can be four. So either it should be two ways. One is spending or getting. If you are spending, it should be asset or expenses. That is what you are telling. You have to mention it. So that means here in your thing. So check received from Pranav means as it's not mentioned as loan or any other things borrowing or something. So we already done the sales. Against that we are receiving the money. Got it? The
Yes.
angle should be only four. It should not be more than that. The first thing is you have to judge whether it's money is coming in or money is going out. If the money is coming in, you have to judge whether it's in borrowing or whether it's a revenue. Paid Intel computers, again, it can be accepted as expenses or it can be accepted as asset as well. So withdrew bank for offices, it cannot be an expenses because we are withdrawing money from the bank for office use. That means from the store, from the cash, in the balance sheet, from the cash, we are just reducing the cash.
That's it.
Cash. From the bank, we are transferring to cash. For office, personally, like, sorry, this small expenses. It can be, it should be asset. It's an investment again. Cash received from Bhuvan on loan account. From Bhuvan means we are getting loan. It's a liability. Why it's wrong? It's coming.
Is revenue or asset?
It is liability, correct only. I think there may be spelling this one. That's the reason some of the things is coming false. When you're just making the true or false formula is mentioned, maybe because here that is not there. That drop down is not there. If the drop down is there, na? So only you could select it. Okay, let it be. So withdraw for personal use, it's again asset. It's not a liability. Why means owner is that means
Money is
operator
coming.
is taking money from business. Cash taken for personal, it's again asset. And paid Anush by check on loan account 5,000. Paid means Anush check. That means we are giving the loan. It's not expenses. Okay, on loan account. They are not mentioned it's an interest. So that means it is.
Sir, this is an entry that paid to Anush by check on loan account. So loan account, there is no clarity that on loan account, like we have taken the loan from Anush. So that is why we are paying by check.
So think of it. Think from this angle. We are paying. Money is going out. Okay. So are we paying interest? 5,000 means
No,
that
no,
means
no,
they have
no,
not
we are not
mentioned
paying.
we are paying interest. It may be an EMI. It may be
Hmm.
like we have taken loan and other things. That means we are reducing the asset here. So sorry, it's like paid Anush by loan account. So it's reducing the liability. Correct. That means we paid by check or loan account. Yes. Paid to. Sorry, it's not paid from. Paid to. It's liability. Correct. That means the angle is simple. We are paying, its money is going out, but it is not a expenses, it is not an investment. We are just reducing the revenue because it just take a returns, sales returns we have done, right? So here, returns sales from goods. That means money is, that means the goods is means we have done the sales and we are getting money from that one, but he has returned the goods means revenue is reducing. Revenue is like that. Here the loan is getting reduced. Got it? We can understand from that angle because of the word is and the clarity of that. Okay, it's not very 100% clear. Like paid to Anish by check, whatever the mode, check or cash. On loan account, it's mentioned means we may be paying back. If we are paying back the money to the against the loan which we have taken already, if we are paying back the loan against the loan which we have already taken, then it's going to be liability reduction. If we are paying means if you're paying the interest, then it's going to be expenses because money is going out. Okay, it can be
So
like
if this entry will reverse that cash received from Anush by check on loan account. So
sorry.
we have, I'm saying, if the entry will be reversed, that cash received from Anush by check on loan account. So we have given the loan to Anush, right?
Yes,
So now
paid
we are
from
receiving.
yes, paid to Anush means we are not paid to we are paying now. Paying means generally
Yeah.
money is going out means we get we can assume that it's an asset we are giving the loan. Okay, see if I see this frame angle, if we are giving loan
Yes, sir.
then it's asset. If I assume like that, if we are returning loan, then it's going to be liability reduction. Its money is not going out, but its money is going out, but we already taken that money, we are returning it. So liability reduction, like that we can treat. So for simplification purpose, we can treat it as an asset only. For clarity, that's you can treat it like that, assets. Okay, for simplification purpose. That's what we discussed in the others also. Got it?
Okay, sir.
Clear na, Monica?
Yeah.
Yeah. So what additional capital means again, it's a money coming in, it's a liability of the business, for the business. So I hope everyone has got some clarity what the things which we discussed and what's the connectivity which we missed with these entries. See, these exercises will help you to get some refreshment of like what you are missing from your class, like missing from your colleges. That means what I'm trying to tell you here, you're already working, you may not be working, or maybe working in different ERPs, like Ravi is working in different ERP, and he is working, like Santosh is working, and Monica is not working in accounting or something. So these things will just brush up your ideas, you had some idea at college and other things. What is the way you can restart your things that's going to be help you out. These assignments and other things and all. Now we'll continue. Before that, if you have any questions or some clarification, is this getting useful to you? So because I don't want to drag this for a long time. So I just making sure that your understanding is correct. That's it. Because I don't want to go for this all these things. I can directly start from SAP. With my experience, many people fall behind with this basic idea missing. So miss this basic idea when we discuss the topics of different topics in finance in SAP. So because of these confusions, they lose their interest. That's the reason I'm just I'm just brushing up these things. I hope it is getting useful. So, do you have any feedback, like anything you want to tell about this? Is this useful? What we are doing?
Yes, sir.
Yes,
Anand,
sir.
yes.
Yes, sir.
So don't tell that, okay, uh, because I'm doing this. If you are getting really something not okay, so we can save time also. If you are openly tell something, if you have some feedback, it's not worth if you are spending this much time on this and all. If you have that also, because if you can catch up the things faster, I'm really happy for it. Because do you remember last class when we discussed all these things? Okay, the basic things like basic accounting concept when we discussed, like when we are doing this P&L account and other things at the time of furnitures, we had a clarity about what is actually depreciation. We got an idea of what is depreciation. Till now, if you ask anybody, they tell you, okay, depreciation is a reduction of asset. Actually, it's not a reduction, it's a recovery of investment. Okay, what we paid in advance for many years. That's the meaning of depreciation. So what we discussed last class. So we had got an idea of, okay, how we can understand this basic accounting. That means, one second, just to how this accounting that okay expenses or revenues or something like this how it's going to be investments or a liability. Why do we call this as a liability? Why do we do this four segregations, the basic segregations in accounting? We understood. This is what we try to understand in the understand this core concept. So what is the use of this? The simple thing is it's very much important judging where to account it. It's very much important. So you can like say, for example, if you are spending, you can debit this asset, you can debit the expense. Both are same. So we are debiting this one. And what is and also when you're getting some money, you can credit. Both are getting credit. But which account it has to go? How it works? You have to understand that. Please just have this idea. So that means what I'm trying to tell here. So what's actually debit and what is actually credit? Let us have a simple discussion on this. Today is the basic. Again, let's just continue for a while. What is debit and what is credit in accounting? I will tell you. Yes, Santosh. What is debit? What is credit?
No,
Yes, Santosh.
debit is income, credit is expenses.
Income.
Debit,
Hmm.
credit is expenses.
Credit is expenses. Okay. What is Santosh is telling? It's income, debit, expenses, credit. Yes. What about others? Deepa. Deepa.
Yes, sir.
Yes. What is debit and what is credit? Santosh, his answer is here.
Debit is incomes and gains. Credit is loss and expenses.
Okay. 1 second. Uh, let me collect your answers. So debit is income. Credit is Deepa?
Expense.
Expense. Okay. What about Ravi?
Debit expenses, credit income.
What about Monica? 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 Monica, are you there? Okay, Arshita.
Debit the expenses, credit the income, sir.
Now we have 4 students and we have 2 different opinions. Santosh and Deepa is telling this and you are telling opposite. Which one should I accept? We have only debit and credit. We don't have anything else. Okay. The only question is which one is what? What we debit and what we credit? What's the use? That's what we are trying to understand. So in just in 4 people, we are getting opposite answers. Which one is correct? Which one should I say it's correct or wrong? Though this clarity should be there. This clarity should be there. See, the concept of debit is debit and credit is if you're getting some money or getting some money, we credit. If you're getting, we are spending some money, we debit. Then I have who is wrong now? Who is wrong? Santosh and Deepa is wrong. So the debit concept means what we do. The debit means you have to think from this angle only before you like it's going to be very easy actually, but you have to think before judging whether you want to debit or credit. So that it's going to be easy. Mechanism of accounting is very easy. So the debit means if money from the transaction, however, everything is money only there in business, every transaction. You have to think if the money is going out, credit means if the money is coming in. That's it. So that means here, these two are going out. Then it should be always debit. That means like in direct angle. If returns and other things are done, it's going to be credit. But in a highlighted way. 90% of the time it's going to be debit and it's going to be credit. Why do you credit means the idea behind what is credit and other things and all. These accounts will get credited means what? We are getting money from like here. Debited means we are spending money in these accounts. Why do we require GL accounts? Let us like that's what. You are clear with this debit and credit, right? All of you?
Yes, sir.
Santosh and Deepa, you want the clarity? A
Yeah,
simple
yeah.
explanation. Don't
Yeah,
go for this concept. Don't go for this golden rules of account and that this and all. Don't worry. Okay, ignore all those things. Just have this much is enough. So debit, okay. Money is if a money is going out, let me debit, and money is coming in. Okay, just think from that angle. See, now let us understand the concept of ledgers. What is actually ledgers? We'll understand. What is ledgers? Again, from this comes this Santosh. What is ledgers? I'm not talking about general ledger. I'm just asking what is ledgers? A general
The
meaning
group,
of ledgers.
a group of accounts.
Sorry?
Group of accounts.
Group of accounts, ledgers. Okay. What is ledger? Singular.
Say
Ledger.
accounts.
Huh?
Say accounts.
What is account?
Accounts mean daily transaction.
You're telling that it's account.
Yeah.
What is account? Account.
Account debit or credit.
How do you say it's debit or credit?
Based on transaction.
No, I'm not talking that. You're telling account. Okay, let me take it as accounting. Okay.
Yeah. Summarizing,
What is,
classifying, and
okay, tell me, go ahead.
yes, summarizing and analyzing and interpreting and recording the transaction is accounting.
Account. Why do you want to do that?
Yeah. Company financial position and accuracy of financial data. Company.
Is it related to only accounting is related to only business?